Um, so I guess we're about a minute past the top of the hour, so maybe it's a good time to get things rolling here. I see we've got lots of folks logged in and sort of ready to start. So rather than holding other folks up, we'll get the ball rolling. So everyone, just a few points from me before I turn it over to Kevin to give us the presentation. So I'm Pete with North 49. We are a Sage partner and development partner. Kevin, excuse me, and Jamal are from Avalara, and Avalara, as you may know, are the sales tax experts, sales and use tax experts. This is what they do every day of their lives, and their whole company is dedicated to making sure that people are compliant and do the things they need to do with respect to sales tax and use tax and even exemption certificates and that kind of thing. So it is and will probably continue to be a fairly complex thing. And I think companies like Avalara are perfectly positioned to be that service that you would use, because it is such a complex thing, especially if you're selling into multiple states. You just don't know what your compliance issues are, and these guys will make sure that you're compliant. Did I say we're recording this session? So afterwards, if you need to share it with your colleagues, you can do that. If you have questions throughout the presentation, either use the Q&A or the chat. I'll monitor that while Kevin is doing his thing. And I'll try to either interrupt him, or maybe we'll save him to the end, depending upon what the question is. If it's, I guess, relevant to the topic being discussed at that point, we may interrupt Kevin and ask him to get an answer to that question. So I guess with that, Kevin, I will turn it over to you and let you tell the folks all the good stuff about sales tax compliance.
Perfect. Thank you, Peter. And thank you guys for jumping on the line here early morning for most of you guys, or kind of towards the midday to talk about sales tax. To give a little bit of an introduction to myself, Kevin Anderson, and I've been working with Avalara for the last 4 years. Been involved with sales tax for a little bit longer than that, but really focusing on sales tax automation for the last 4 years. And actually the last 3, been working with Peter and North 49, as well as a few other businesses within the Sage space to effectively, my traditional role is to work with businesses utilizing Sage to figure out how they can best leverage sales tax automation. So I've been doing that for about 3 years, and it's been great so far. But for today, we're actually not going to focus too much on the automation piece. More so, we're going to use our time here to run through at the high level why sales tax is such a important subject today, what the landscape looks like, how it's changed a little bit, and at the core of this, I want to make sure that I'm giving you and your team five tools to double check that there are no growing problems or growing exposures for your business. And that way you have a set of 5 tools that you can go back, run through, and make sure that there's no outstanding problems or any worries or concerns. And so we'll get those 5 takeaways, and then if something does jump out at you, if you do have questions, feel free to ask that throughout the course of the course of the conversation. But we'll also quickly touch on what it looks like to address any past compliance. If it does turn out that your business has unaddressed compliance, really what that looks like to address that. And jumping kind of right in, sales tax is a pretty complex subject, and it's a little counterintuitive because it shouldn't be. You kind of think of it as I go to the grocery store, or I go to the gas station, want to buy a candy bar. It's an additional markup that I'm used to, and I pay that, and that's about it. But there's a whole lot that goes into that, especially as the type of business that we're working with is more so than just a brick and mortar store. And one of the biggest reasons that we're having this conversation now is that this pretty complex subject is getting more and more complex. States now are able to, the obligation for businesses is growing into more and more states across the US. And with that comes a whole lot of complexity around the jurisdictions that have authority over sales tax. I know in Canada, I believe that there's 9 different rates to keep up with across the different provinces, and it's not sales tax, but similar to. And there's nine different rates that need to be accounted for. And if there's a change to those rates, I believe that it has to go through quite a few checks and balances and announcements before that change is made. Well, it's a little bit different in the US, where we have actually 13,000 sales tax jurisdictions across the 46 states that are the 50 states. And each of those jurisdictions has authority over their sales tax rates. So they're able to change those on their own. They don't have to go through a long process. It can actually just be there one day and gone the next, or changed the next. And so keeping up with that is a very daunting task, as you have to register in more and more states. And because states are making more and more businesses register with them, keep up to date with all these rules, the internal spend for businesses surrounding compliance is just on an upward trajectory. It's just getting higher and higher. The amount of effort that businesses are having to put into maintaining good compliance is a very costly endeavor. And why we're bringing it up right now is that the unfortunate piece is that compliance is not optional. When dealing with the state, the burden of proof that you guys have maintained compliance in their state is up to you. And so you do need to have all the documentation, all the necessary pieces of compliance ready to send over to that auditor. And that's in a state where you have been registered, and the auditor will come in usually within the first 5 years of you registering. They'll conduct an initial audit. Again, asking you for all the necessary pieces to sail through that audit. And then after that, you're on a pretty much a rolling calendar of every 3 to 5 years with these states of having to get audited again. And that's if you're registered. If the state reaches out to you and they determine that you have an obligation and you didn't register with them, the state can actually hold you liable for all of the back taxes that you should have collected, as well as penalties and interest. And that interest is a little bit of a kicker there. And so with that, again, kind of the takeaway here is that it is something that needs to be addressed if necessary. And the burden of proof, or the working through that audit, is based upon your business, and it is something that you guys need to keep up to date with. And sales tax has been around for a long time, so kind of the big question here is why are we talking about this now? Why is this of the utmost importance today? And the reason is that states are getting, it says greater there, but better, or the way I like to think of it, is that states are getting they're needier than they've ever been. So back in 2019, the US hired a third party to kind of analyze where their biggest shortcomings with collecting revenue has been, or collecting taxes. And the biggest area was uncollected sales tax from internet sales or from remote sales. In fact, in 2019, back when that study was done, there was a deficit of $13 billion of uncollected sales tax. And where that really plays into to today's conversation is all that 13 billion was before COVID and before the pandemic. And now each of these states have tapped into their emergency fund. They've spent quite a bit of it, and they're needing to replenish that emergency fund. And they see that there's a $13 billion line item there that they can address. Now, states are taking two approaches to minimizing that deficit as much as possible, and also refuel their emergency funds. The first one that we've seen is that states are starting to change the taxability of products and services within their state. So something that wasn't taxable traditionally, states are now considering that taxable and collecting sales tax from those businesses that are already registered in their state. And the other big way that states are addressing this deficit is by effectively creating or making more and more businesses register with their state and begin filing and remitting sales tax. And that is that obligation, or the process of a state saying that a business needs to register with them and begin filing and remitting sales tax. That's called creating Nexus. And so that obligation is called Nexus in our lingo. And this, when it comes to Nexus, states have quite a few tools in their tool belt to create those obligations. So for our conversation, we'll call these actually, to take one step back, within the US, before you have to register and begin maintaining compliance within a state, you have to first create that obligation. And that creating that obligation, for our conversation, we'll call that Nexus creating activity. So it's a business activity that the state will look at and say, that right there, that means that you should be registered with us and begin filing or collecting and remitting sales tax to us. And when we're talking about Nexus creating activities, they kind of fall into two camps. And the first camp is based off of physical presence. And these are the laws that states have in place that have been in place for quite some time. Really, I think the biggest updates happened back in the mid-90s. So these laws are well over 20 years old when we're talking about physical Nexus and physical Nexus creating activities. And what I'd like to do here is this is really where we're going to break or dive into the 5 checkpoints that you can conduct within your business to make sure that you haven't created any new Nexus or any new obligations. And the first one, when talking with businesses, kind of day in, day out, the first one that comes up that often goes unlooked when it comes to Nexus or sales tax Nexus is remote employees or contractors. When we're talking about physical presence, the states got very creative in what defines physical presence, so that more and more businesses need to register with them. And the first one that's overlooked is remote employees or 1099 contractors. So anywhere that you have a remote employee or a 1099 contractor that's not your home state, that creates the obligation, that creates Nexus. And that creates Nexus. Double checking if you do have any employees outside of your home state or 1099 contractors, that's the first step to ensuring that you are registered and all that you don't have any outstanding obligations or outstanding Nexus. The second piece that comes up on quite a few conversations that I have is common ownership. So if you do have any subsidiaries, or if you have any sister companies that all roll up to the same management or to the same owners or the same board, that oftentimes will create an obligation where each of those businesses will have the same footprint. They'll all share the same obligations in the same states. Now, this will require a little bit more investigation. It's not quite as cut and dry as employees, remote employees or 1099 contractors. But with that, there are quite a few laws in place between states where that affiliation between the subsidiaries or sister companies does create an obligation across all businesses, just based off of that corporate structure. And so that is something that you will want to look into. So far we've got 2. We've got the double checking that if you have any remote employees or 1099 contractors outside of or throughout the states or outside of your home state. And then the second check is if you do have any subsidiaries or sister companies with similar ownership, really starting an investigation there to see if you do need to mirror each company's footprint and make sure that that's standard across the board. Now, the third piece is it's kind of a little bit different way of thinking of physical presence. And that is a lot of businesses that I work with will conduct maintenance or warranty services, whether that be through their own team running out to conduct this maintenance or warranty services, or they'll hire a third-party contract or a third party to conduct these services or maintenance on their behalf. And that business relationship with the third party or the activity of sending your own team in across state lines, that does create an obligation with that state, or that does create Nexus with that state. So now we've got the top 3. We've got remote employees and contractors, common ownership, and then double checking if you do have warranty or maintenance services where you are traveling outside of your home state or contracting with a third party across the country. We do need to double check that to make sure that there's no new obligations. The fourth key piece to go back and check is utilizing any third-party fulfillment centers, or storing inventory in across the country in different states than your home state. Storing your inventory in a new state, while it very well could be that you don't have any employees that are attached to that inventory or managing that inventory, having that inventory within the different states' borders, that creates that nexus, and you do need to double check that to make sure that you haven't any growing exposure, any unaddressed nexus. Now, again, just to recap, we've got the 4 of double checking and making sure that you don't have any remote employees or 1099 contractors outside your home state, that if you do have any subsidiaries or sister companies, that you're fully investigating whether or not that has created any new obligations. If you do conduct maintenance or warranty services, either in-house or through a contracted third party, that you're making sure that that hasn't created any new nexus. Or the last one is if you do store inventory throughout the country, whether it be a third-party warehouse or fulfillment center, or if you have your own warehouse and storage facilities that you utilize. Now, those are all physical presence. All those laws have been around for a long time. The last check that I want to put in front of you guys is surrounding economic nexus. And economic nexus is the idea that that a state or that a business creates the obligation or creates nexus with the state just based off of their sales into that state, not based off of any physical presence, not based off of remote employees or anything along those lines, just simply the amount of sales that you conduct within that state throughout the year. Each of these states that are in blue, they have put forth a threshold that if you sell over that threshold, whether it be revenue or number of shipments, that creates an obligation with that state, just the same as if you opened up a retail location there or hired a bunch of remote employees within that state. Now, with these, the kind of the 5th function check, so we've got the 4 that's around physical presence. The 5th function check is double checking if you sell remotely or if you sell outside of your home state at all. You need to double check whether or not you've crossed any of these thresholds. Now, most of these when it comes to sales tax, you'll love the answer that it depends on the state as far as what the thresholds are. But with these different states, we have all my apologies for that. So Peter, where did I start getting choppy?
We're on the economic nexus thing. You're talking about how every state is different, and I think is right around there
Okay.
where you went quiet.
All right. So every state is a little bit different. So again, with economic nexus, states are just looking at the number of sales. They don't, for the most part, they're not worried about if it's sales to exempt customers, if it's taxable sales or non-taxable sales. They just want to see, in general, the gross amount of sales that you are conducting within their state over the year, and whether or not it breaks their individual threshold. Each state is a little bit different, or can be a little bit different. It's their decision. But a good rule of thumb to double check if you may have created economic nexus anywhere is to check and see if you've sold over $100,000 worth of sales into a state or over 200 shipments. And so double checking that and making sure that that you haven't crossed those 2 thresholds. That's a great way to ensure that you have haven't created any new obligations.
I have a question about Kansas specifically, Kevin. Do you have
Yeah.
any information specifically about Kansas?
I do. Yep. So Kansas has removed the threshold. So if you have any sales into Kansas, Kansas states that you have the obligation then to register and begin collecting and remitting sales tax.
And then one more question with respect to selling through resellers. Maybe a retailer who collects sales tax, is there an obligation created there?
Yeah, and so Frank, that's a great piece to define. So 38 of the states that are enforcing economic nexus count exempt sales, so selling to a reseller is exempt because that reseller is exempt. They count that towards their threshold. And so while your sales may be tax exempt, the obligation is still created with that state, and there are still efforts towards compliance that need to be taken by your team, or else you are subject to fines and penalties.
And that compliance, that doesn't necessarily mean you have to pay them anything. It just means that you have to report. Is that right? Or is it
Yep.
something?
It depends. So, and that's actually a great segue. So real quick, before we dive right into that, the one piece that I wanted to quickly cover is kind of just a summary of those 5 takeaways that we've been talking about. So double checking if you have any remote employees, double checking if you have any common ownership, making sure that making sure that you don't have any warranty or maintenance services in different states, whether that be through a third party or an in-house team. Double checking if you have inventory stored outside of your home state, and then if you sell outside of your home state, double checking if you've crossed any thresholds. David, yes, is that per year or per month? It is on an annual basis. So over 12 months, if you cross a threshold, that creates the obligation. All right. And kind of dovetailing back into Frank's question, what happens if most of my sales are exempt? I'm in the manufacturing or distribution space. Really, how does that look when it comes to economic nexus? And I kind of mentioned this, that nexus is the obligation to maintain compliance. And so crossing those thresholds, whether it be through taxable sales or tax exempt sales, still creates that obligation with the state. And the state is then going to require you as a business to have an exemption certificate on file for every customer that you're selling to within their state. If the state does reach out to you before you're able to register with them, they will hold you liable for all of the sales tax that should have been collected until you're able to collect that exemption certificate to exempt those sales. And with that, they do put a time period on it, or a timeline on it. And then moving forward, you are required to file and remit returns that detail your sales activity within that state, the exempt sales. Most businesses do have some taxable sales. Usually there's a mix, kind of think of it as 97% exempt, maybe 3% taxable, or some blend there. And so you would also need to collect the sales tax on those taxable sales and file and remit that with the states as well. And yeah, so that at this point, once you have created that obligation, you then need to prove why you don't have to collect sales tax on those sales. And in general, I've pulled up a couple use cases for a couple Avalara clients in the manufacturing distribution space. I didn't work specifically with these guys, so I'll talk a little bit more about the last business that I was working with. They're out of New York, Venturi, great company, based in New York, only have physical presence in New York, maintaining compliance there. And they needed roughly 50 exemption certificates from their New York customers. Outside of New York, all of their exempt customers that they're selling to, they didn't have an obligation, so they didn't have sales tax turned on for those states. So they're getting a $0 determination just like normal. And since they weren't registered there, they weren't having to collect the exemption certificates, and things were going along just fine. They created obligation in about 23 states and had to turn on those 23 states and then collect exemption certificates from all of those customers that, on Monday morning, they were fine just purchasing without an exemption certificate. Once they registered with the state Tuesday, they all of a sudden needed exemption certificates from them. And it really jumped the number of exemption certificates that they had on file from 50 up to just under 3,000. And with that, it's a lot of management of understanding and making sure that they're collecting the right exemption certificate from the customer that is valid and audit ready. And that's one of the biggest problems when it comes to exemption certificates, is that they are a piece of paper that is worth quite a bit of money in the eyes of the state. All of the sales tax that that customer should have paid you, or that you should have collected from that customer. The only way that it's exempt is if you have collected the correct exemption certificate that is valid. And there's a whole bunch of different versions of exemption certificates that that are needed across the board. So there's things like do I collect a direct pay permit? Do I collect a multi-state exemption certificate? Is a multi-state exemption certificate valid in all of these states? Do I need a state-specific exemption certificate? How do I verify that the exempt tax ID number that is filled out on the exemption certificate, how do I verify that that's correct and not just somebody's hunting license that they filled or scribbled in as quick as they could? When do these exemption certificates expire? How do I track when they're going to expire? How do I go collect the new one? All those types of things roll into proper exemption certificate management to keep you compliant in these new states as new obligations arise. From there, all that information does need to go onto a tax return, and it does need to be submitted to the state. The state does want some form of record of your sales in their state so that they know and they're able to quickly understand whether or not you are selling taxable or non-taxable goods, and then also use that as a reference point if they do come and audit you. And if you haven't registered with the state and you haven't been filing and remitting, you are subject to fines and penalties around non-compliance, as well as late filings and late fees. All right, so actually let me back up real quick. So with kind of detailing out how ongoing compliance is different from business to business. Obviously, somebody that's selling direct to the end user has a lot of sales tax that they're going to be collecting and remitting to the state. A manufacturer distributor, really the name of the game is exemption certificate management, and then accounting for sales to remit to the state, even though it's all, it is all exempt. While those activities look different, the driving force behind our conversation today is really where those obligations exist. Where do you have Nexus so that you know where you need to maintain your compliance on an ongoing basis? And if there are questions around that, Avalara is positioned to best help you guys out through a sales tax risk assessment. And this is where our professional services team, which is made up of CPAs and ex-auditors, will review your last year's business activities and then cross-reference that against all the different laws that states have in place surrounding Nexus and sales and use tax. That way, after our teams reviewed your business activities, been able to run that through the different laws that states have, or that states are enforcing, we're then able to give you a very cut and dry list of states where you have Nexus, or where you have the obligation to establish and maintain compliance. And this usually takes about 5 to 7 business days from when our team is able to review the findings. And this is, again, a great way to set a good base course for how to best build your sales and use tax compliance strategy. And so if there are some big questions on your end, things that we need to dive a little bit deeper into, if you go back and do those 5 checks, those 5 function checks, and any of them come back yes, what I am happy to do is suggest the sales tax risk assessment. That way you have a professional detailing of all of your obligations. And since you guys jumped on the line here today, happy to give a 50% discount to that sales tax risk assessment, and so saving you a couple $1,000s there right off the bat. And the other advantage is once you have that risk assessment, you'll have a very detailed breakdown of where you need to establish and maintain compliance, and you'll also be engaged with our professional services team, and they'll be able to, at that point, once we have that list of states that you have an obligation in, our team will then work with you to best refine exactly what your exposure is by state, how much the state may hold you liable for, and then we'll be working together to minimize that exposure as much as possible before registering with the states. And at that point, we could also open up a conversation around sales tax automation software, see if that would help you guys on an ongoing basis as well.
There's a question, Kevin, again from Frank, about how would states collect across state lines? What's their, I guess, authority or?
Yeah, so within the U.S., any law that's enforced in one state can be enforced across the state lines. If you remember back to the early 2000s, marriage was legal for everybody in Vermont. So a lot of people traveled up to Vermont, got married, and then went back to their home state, and that had to be held as legal in their home state. So effectively, they're able to enforce these across state lines because of reciprocity between the states. Did that explain that well? I know that's a big question.
Well, it made sense to me. I don't know what everybody else.
Frank, shoot me a quick note if it made sense, or if you have any follow-up questions.
We're probably good to carry on.
All right, I think we're good to go. And so with that, that really is the big the overarching point of our talk here today is really just making sure that you guys have a few extra tools to ensure your compliance, especially. Oh,
there's the follow-up question. How does it enforce from Canada into the U.S.?
That's an interesting question, and I will have to look into it.
And we'll dig into that, Frank, and get back to you on that. I think I probably have your email address, so we'll get Kevin to dig it up with his experts and find out what the recourse, I guess, would be for states into Canada.
Most certainly. Yep. Now, and I can not say with 100% certainty, but more than likely they would hire a Canadian firm to put a lien on your business.
I know as far as income tax is concerned, there are kind of reciprocal agreements between Canada and the U.S. with respect to income tax. Now, there may be something similar with respect to sales tax, but we'll get to the bottom of that one for you.
Most certainly.
Yeah.
Most certainly. All right. Well, so again, just really hitting on the want you guys to walk away with 5 tools to best ensure your business. With that, we've also put together a little contest here at the for the last couple minutes of our conversation, and so we are going to play a little game of trivia. Let's see if we could use the Q&A, or actually we'll just use the chat. Everybody seems to be already working well within the. Oh, so Shane just asked, can you go deeper into when you register with the state versus when you realize you crossed the threshold? So once you've crossed a threshold, that is the Nexus triggering event that the state would use as defining when you should have begun, when you should have established and began maintaining compliance within their state. So it is as once you, so kind of think of if the threshold is $100,000, that $101st that you sell into the state should have proper sales tax attached to it, or exemption certificates exempting it from that.
And that's the trigger point when you register. Is that what you're saying?
Yep. And so registering before or as close to when you cross that threshold is a best practice there.
Yeah, I guess the thing is you don't want to go on for any long period of time without registering if you know you've got that economic nexus, because that can trigger, as you said before, penalties and back interest and all that kind of stuff, right? So you want to be as close to that line as possible to avoid any of that.
Yep. And a lot of businesses, if they're so kind of stereotypically how when I'm working with a company, they'll have a state or a couple states that they feel like they need to register with, or more than likely have crossed the threshold there. we'll then work to understand if there are any other states that they're within 90% of that threshold. And then depending on the business that you're working with, a lot of them will just knock out all of those states all at once. So they'll have, 3 states where they've crossed the threshold, and then 2 states that they're on the border, and they'll just knock all 5 out at once. And that way you're eliminating any potential risk in those, or growing risk in those 2 additional states.
So I guess that exposure analysis, or I can't remember what you referred to it as, but that study that you will do will actually pinpoint all of that stuff for the company
Correct.
that you're doing it for, right? You'll tell them where they are, how close to the line, what their potential exposure is going to be upcoming as well as currently.
Yep.
Okay.
Yep. So all that's broken down and reviewed with you with a sales tax professional.
Kevin, probably important to note also, so of course you set that baseline with that study, but going forward, all of your transactions are then looked at, so we can actually automate that process for you. So instead of it being a manual process where you're tracking transactions and revenue into a state, we automate that process, and your account manager is able to alert you once you reach 80% of a threshold for a new state. So we completely automate that process once you become an Avalara customer.
Yeah, thank you for highlighting that, Jamal. Good deal.
Any further questions from anyone? Shane's itching to do, or sorry, Kevin's itching to do his. What are you doing? A survey or a?
Oh, just a quick. Yeah, we're gonna do one trivia question. The first person to answer correctly, first person to answer correctly gets a $50 virtual gift card. And so once I ask the question, go ahead and type it into the chat and hit enter, and whoever comes up first, we'll send that e-gift card to you right away.
All right.
All right, and the question I had prepared got taken by the Q&A earlier, so I'm having to think on the fly here. Let's see. So with that, we had the 5 checkpoints that you can go back and run through at your business to double ensure that there's no new compliance that's required of you guys. With that, our 1099 contractors and employing or paying out that business affiliation, does that create an obligation in a new state? Or in a state that, there you go. Yes, yeah, it does. Shane was all over it.
All right.
Perfect.
Well,
all right. Well, Shane, we've got your email, so we'll send that over. And as I'm wrapping up on my end, I'll send you guys a quick call here in a few days to double check if there's any additional questions. I also know I need to follow up with the Canadian specific question for Economic Nexus. And then if you do have any questions though, please feel free to give me a call or shoot me an email. And then we also do have that 50% off of the risk assessment that you guys have access to. So I look forward to chatting with you guys here shortly. But at this point, I'll flip back over to
just pop to the next slide.
Yeah. Oh. There we go.
There we go. So yeah, I just wanted to let you guys know. I know some of the folks on the call we probably already work with, but those of you who don't know us, we, as I said at the outset, we're a Sage business partner, which means we sell, support, and install Sage for our customers. We've been doing it for a very long time. On top of that, much like Avalara is what's called an ISV or a development partner, we are as well. We actually publish some online stuff for folks, particularly right now in the Sage 300 space, to take their businesses online. We've got a customer portal, which is really self-service for customers. It lets them get their customers into self-serve to pay their bills online, reprint invoices, even place orders. And then on top of that, there's a much more sophisticated or involved process, which is really a web store deeply integrated to Sage 300. So anybody who's using Sage 300 wants to take their business online, we will connect the two so that they behave as one application. It really minimizes the ongoing maintenance and support you have to do because the two share data back and forth. There's no manual or semi-automated process of getting orders in and products up and all that kind of stuff. It's all sharing the same data. It's always current. So anyway, that's who we are. If you're working with a financial system, maybe that needs a little bit of a refresh, we'd be happy to speak to you about that. We've got lots of experience sort of helping people modernize their financial systems. So a couple of areas we might be able to help if you're actually using Sage 300. Well, we've got our e-com products, and if you're looking for possibly a new financial solution, we may be able to help there. So that's us. That's what we do. Hope you found this session useful. I know I always do when I hear all this talk about sales tax and economic nexus and all that stuff. And the thing is, it changes all the time. It's difficult for a business, especially if you're selling and you have this nexus across multiple states. Keeping up with it yourself is a full-time job. And so having it automated through an application like Avalara really saves you a ton of time, and it makes sure you're compliant. So anyway, thanks, Kevin. Thanks, Jamal, for the presentation. Really appreciate it. And I hope everyone enjoyed what they saw.
Thank you.
Yeah,
Everyone.
thank you guys.
Thanks,
Have a good
everyone.
one.
We'll give you back 15 or 20 minutes of your day.